Sometimes investing is a lot like boxing, where you need to know how to throw the best punch. That is, picking and choosing the absolute best stocks. But also, it's about knowing how to move out the way, which is to avoid some of the worst stocks. And that is what we're going to talk about today. What are the stocks you should absolutely avoid, the ones you should not buy? And these are names that you know. And I'll give you a hint. One of them is not Tesla. Let's go ahead and break it down. So what I've done is picked 1, 2, 3, 4, 5. My top 5 stocks that I don't think you should buy right now. And these are, for the most part, household names. These are names and companies that you will look at. Some of these companies you may shop at often and say, hey, I like this stock. I've heard of this company. I want to go ahead and buy it. And you're likely to lose money, because remember, when you lose money on a stock, it is going to take much longer than you think to break even, okay? It's a lot harder to make money after you have lost. It is just the basic math of how losing money works, is how percentages work. Now, we are not going to be perfect. Nobody is perfect. I have lost money on a stock. We have all lost money on a stock. I mean, we all went through 2022, okay? But the objective here, just like boxing, you want to take as little hits as possible, okay? So that's what we're going to discuss today. So first here is Boeing. Boeing has not been a great company for a very long time when it comes to the investing perspective. Now, you know that we have talked about Boeing a few times on this channel. I've done at least 2 videos on them, and you know why they are in the news. There was just another headline today about what happened to the inspector, and it wasn't good, okay? But they are down 8% in the last 6 months, down 17% over last year. Yes, the stock market is choppy. There's a lot of stuff going on in the news when it comes to earnings, both good and bad, depending on what stocks you're looking at. I just don't think Boeing is a great place to invest right now. There are some that feel like this is a great time to buy low and sell high, but even if you zoom out on a company like Boeing, it's been low for close to 5 years, if not longer. I don't know what to tell you. I don't know what to tell you. Now, if this was like one bad year out of 5, then okay, maybe I can see the case. But that it hasn't been that for Boeing. So unless you are somebody who makes money when a stock falls, which is something you can do, it's a little bit more advanced. We can talk about that at a later date. That is the only way I would look at Boeing. But if you want to lose money, if you want to lose a lot of money, Boeing is a company for you, which is not something that I want you to do. Okay, I don't want you to lose money. So Boeing is not a company that I would invest and be confident in. Next here is Starbucks. I considered doing an entire video on what in the world is going on with Starbucks. It was a solid company. It wasn't solid enough for us to really put it on any of our list, which is kind of funny. But Starbucks is down 19% in the last 6 months and down 34% over the last year. Now, I will admit, this got a lot worse over the last week or so. They announced earnings and the stock really crashed. So I would argue, if this were 2 weeks ago, perhaps it wouldn't be this bad, and maybe it wouldn't have been on this list, but it hasn't been great in either case. A lot of this is because they have really slowed down in China. That is a very big market for them, a very important market for them, and people ain't buying coffee like they used to, apparently, and that has started to hurt their business. They are still opening up a lot of coffee shops, which to me is strange. I feel like we're saturated. When it comes to Starbucks, but things are starting to change for that company. Not a stock I would buy. I know there are some people that are very loyal to the brand. I think that's dangerous when it comes to the stock market. I mentioned this with Apple too, right? You may like Apple products. It doesn't mean you have to be married to Apple, the stock. I see memes about this all the time. When you own an iPhone, you have to own the stock. While that has worked in the past, it doesn't necessarily work for you this year, right? I'm not telling you to buy Apple or not buy Apple. I'm not telling you to buy Starbucks or not buy Starbucks, whether it's the drink or the stock. But I'm saying that they are 2 different evaluation processes, okay? I don't think Starbucks is a great stock right now. I haven't really ever been the biggest person on Starbucks shares, except for the one time that we saw the CEO buy into the company. That was close to 3 years ago now. That was the one time I was like, hey, let's buy Starbucks because the CEO bought it. And that was that one time. And that was it. And then the stock was up. Then we made like 30%. That was it. We didn't touch it since, okay? But that's really it. Next one here, and this is one that I have lost money on, okay? And I'm up out of here because y'all know the process, okay? Y'all know the process. Intel, INTC is stock symbol. Down 16% in the last 6 months. Down 2% over last year. how did I, of all the chip makers, of all the chip stocks out there, why did I choose one of the ones that lost money? Okay, now yes, I got Nvidia. Yes, I have other chip stocks that are doing well, in AMD. So it hasn't put a dent in my portfolio, obviously. But of all the ones, like this was another chip stock where I was trying to do some covered calls. Again, transparency. I'll tell y'all what's going on in my portfolio. But one of the reasons why I did cover calls, or tried to do cover calls for this one, is because at the time it was under $100 a share. It's hard to buy 100 shares of Nvidia. Okay? So tried to do it with Intel. Intel kept falling, and kept on falling. I don't exactly know why. This is one I would do a bit more research on, but honestly at this point I'm letting it go, take my L and just move on, take my ball and play somewhere else and find a stock that's a bit more quality. It's very, very strange because again, I see why now today a company would be kind of shaky, but again, down 2% over last year when tech has been so great. Question marks, especially after the CHIPS Act, question marks. Don't know what's going on in Intel. It's a question that I would definitely have, like, what are y'all doing? Why are you losing money? Next here is one that is curious to me because, again, I see this company all the time. It's CVS. CVS is trash, okay? CVS is down 18%. I was there yesterday. CVS is down 18% over the last 6 months, down 23% over last year. Is not doing well. It hasn't, I even looked at a 5-year chart. It really has not done well since the pandemic. And the last time I remember talking about CVS, I was on a podcast talking about what they were trying to do in the metaverse. That is how long CVS has not been relevant. And I would argue they haven't been relevant then. You can see a nobody, and I mean nobody, talking about the metaverse now. Just throwing it out there, okay? Not a company I would invest in. Again, this is one of those stocks where people say, if you shop there, you should buy the stock, or that's where you should start the research process. That's why I'm not really the biggest fan, because it doesn't tell you whether the company is good just because you shop there. Again, I was there yesterday, I was there today. Would not be a company I would buy. Next here is Fizer. Fizer usually falls into the good dividend category. Just because it pays a dividend, we say this all the time, doesn't mean it's a great stock. This was down 11% in the last 6 months and down 30% over last year. They are a well-established company. Just because they're a well-established company does not make it a good stock. You got Eli Lilly, which is doing well. Fizer is not one of those companies. Not a company I would buy. Some people try and pick this one up on a discount. I would say that Fizer, again, outside of the pandemic, has usually been a laggard, is a technical term here, but a company just has never really outperformed the market. It has always been, 4, 5, 6% is an okay year for a company like Fizer, at least when I tend to look at it. So it's not one I've ever been really excited about unless I'm looking for dividends, which in this case I'm not. I'm certainly not going to look for a dividend when a company is down 30% over the last year. So those are the companies that I just really don't, for me, right? For me, these are not companies that I would buy. You really want to try and avoid those companies when possible. Now, Tesla is a company that is down 8% in the last 6 months and down 17% over last year. It's not a company I would be excited about buying. I'm sorry, let me correct myself. That was Boeing. Sorry, check my notes. Tesla is down 10%. Tesla's down 10% over the last 6 months. This is as of yesterday, and up 9% over last year. That's not great. It's not worse. It's not bad enough. Grammar. It's not bad enough for me to put it on the list. I'm not excited about Tesla, but I'm not on the sell Tesla, jump off the Tesla bandwagon. Tesla does strange things. It does things that do not make sense, as we saw with earnings, okay? So would I be excited about buying shares of Tesla? No. Would I jump off of Tesla and sell everything? No, I wouldn't do that either. Would I trim a little bit of Tesla? Let's say if I have, I'm just making up a number here. Let's say if I have $10,000 worth of Tesla shares, would I trim it down to like $7,000? Maybe. If I'm up and I've made some money, maybe I'll trim down just a bit, take that money, put it somewhere else. Take some of it off the table. That is probably what I would do if I've had it, if it makes tax sense for me and I can put that money somewhere else. That would be what I would do with Tesla, but I probably wouldn't just get rid of it and jump out of it. It makes more sense to be a long-term investor, because even though I have had my own criticisms, it's still the dominant player and it's likely going to be that way for a long time, even though there are some legitimate concerns. If you want to know more about those concerns when it comes to Tesla and why I do have, you know, a legit gripe and they are not, you know, invincible, then there is a video that you do want to watch. This right here. If you want to learn more about investing, then you want to check out this video right here.